Good morning, welcome to the market view for Monday the 14th of July 2014. Starting off with the 30-minute chart for the British pound, we can see that we had three signals on Friday. Two were unfilled, and the second one of the trading session was actually filled, and then the market attempted to move higher, actually filling the trade. The market traded up to the 171.50 resistance and then just went into a sideways trading pattern with the red candle following, and 50% below this bar actually takes it below the entry price. I'll just show you that. So trying to conserve the capital there by reducing losses was not going to happen. We're already at a 19 pip risk on this trade. Let me just drag this out so you can see it. So you have the 19 pips there. So this 50% below actually added more to the potential loss, so we can delete this one. The second red candle after the market reversed again traded back up towards the 171, and then we had a third attempt at 171 which then failed as well, and then we see the option there of actually being able to place in a stop and reduce the risk by 10 pips, which the trade was stopped out with a 9 pip loss. And the reason for this is that we've got three attempts at 171.50, and also the market, or the stop in this case, would have been below the DP level, the daily pivot. And just to refresh your memories there, if the market is trading below the DP, it's generally considered to be bearish. Although prior to this, of course, the market was trading above, but failing at the 171.50 area. So not too brilliant of a day on Friday, and we can see there we've only got a total range between these grey shaded horizontal lines of 50 pips for the day. So very quiet once again for the pound on Friday there. In the daily chart, this is reflected too. You can see the market stuck in this sideways range. As the days continue now, this is becoming even more defined. So we can see this range. The market trading down to the 171.14 level, which we've got the market sitting on this at the moment. So stuck in this sideways range for the daily chart at the moment. In the news, well, there isn't an awful lot to report today. We've got a holiday for the French. The industrial production is out for the Eurozone at 10 a.m. and then Draghi is going to speak at 6 p.m. this evening. So nothing really for today either. So let's move on to the Dow and have a look and see what this did during Friday's session. As expected, the Dow moved higher on Friday, moving back up 29 points there, I think it is, back towards the 76%. And what I've drawn in here is from this recent high down to the recent low, and the market trading towards that during Friday's trading session. A close back above the 62 is required, this 76, and then we're back to the recent highs. And this is sort of supported, if you like, when you look at the implied volatility, the market dropping down to 9.12 on Friday, and you can see this reflected in the chart as well. I still think we've got some more movement to the upside as far as the Dow is concerned, and if it's going to kick off, it's likely to be this Friday, and I say that with tongue-in-cheek because there'll be no market view this Friday. I will actually be away just for the one day, which I'm just having a short break, and every time I go away, my wife will tell you that the market kicks off or something happens that I should actually be at my post, and unfortunately never am, whether it's gold or the pound or the stock market. So don't be surprised if something happens on Friday when I'm not actually at the screen, because that's Murphy's Law and tends to be the case, or has been the case for the last few years, which is why I don't have too many breaks, because something always happens. So let's wait and see if that's the case, and if that actually follows this week. So just to let you know about that as well. So again, because there's no news today, I would expect this market to continue to the upside moving towards the 76% retracement, and the one I'm actually interested in is this 76% retracement, because this is the one that goes from the recent high to the recent low. In fact, it doesn't, so let me just show you what I am going to look for. So from this recent high to this recent low, what I'm looking for a potential short in this market is the market to fail at 17,010 and show some sort of selling and then tuck underneath and go short. That's the idea at this time, and what to actually look out for, as we still have the implieds in the lower area there. So I'm looking for the market to fail at this 76%. However, if it goes through, then I'll be looking for the same at the recent high of 17,074. So that's this morning's market view, just brief and to the point. All things being equal, I will see you tomorrow. Have a great day. As ever, thank you for your support, very much appreciated, and also for watching.